Imagine this, you found the perfect home and it has everything you ever wanted. Open concept, dream backyard, quiet neighborhood, but here's the catch. Now you're faced with one of the biggest decisions of your life. How do you decide to pay for it? Cash or a loan? It can make or break your financial future. Get it wrong and you could drain away your savings, lose out on wealth building opportunities, or lock yourself into a mortgage that becomes a burden. But here's the good news. By the end of this video, you're gonna have clarity and confidence to make the right decision for your unique situation. So stick with me and I'm gonna show you the pros, the cons, and everything in between to ensure that you make the decision that aligns perfectly with your financial goals. Hey everyone, my name is Jack Bouvier with the Bouvier Real Estate Group at eXp Realty here in Saskatoon. If you want to connect with me, all my details and contact details links are below. Feel free to reach out to me and I'd be happy to connect with you. So why does this decision even matter? Well, it's not just about buying a house. It's about building your future. Whether you choose cash or a loan is going to impact your financial stability, investment potential in the future, and your just overall peace of mind. Let's look at a simple example. Someone who just drains their savings to pay cash and then faces an unexpected job loss without any reserves, you're going to be in a tough spot. Looking at the bigger picture, a home just isn't a purchase. It's likely the largest asset you're ever going to own, and how you finance it is going to influence your ability to handle emergencies, invest in other opportunities, or even retire early. Lots of people say that owning a home outright feels great, but having cash in the bank is what allows you to sleep at night. So let's talk about the pros and the cons of paying in cash. Well, some of the pros of paying in cash is that you do not have any monthly payments, no mortgage payments. You free up your monthly cash flow for other priorities. Example, instead of a $2,000 mortgage payment every single month, that money could go towards investing in another asset or cryptocurrency or RSP, or just enjoying life, doing hobbies and other activities that you enjoy paying for. It also gives you stronger negotiating power. Sellers love cash offers because they close faster and come with fewer contingencies. Let's say you're competing against a buyer who needs a loan for their approval. Well, the seller is going to want to choose your cash offer, even if it's slightly lower, because it makes it more secure and guaranteed for the seller. It's also an interest-free purchase. You avoid paying tens of thousands of dollars in interest over the lifetime of the mortgage, the amortization period. So let's say on a $400,000 house with 5% interest, you'd pay over $370,000 in interest over 30 years, which is a lot. Another benefit of paying in cash is that it's a quick closing. So you don't have to wait for those bank approvals and the financing approval, appraisals, underwriting, nothing like that. You can close as little as 7 to 10 days. Now, some of the cons or disadvantages of paying in cash is that there's not much liquidity. You drain your savings, leaves you vulnerable in emergencies. So let's say if your furnace breaks down or there's a medical expense that arises, well, you might be struggling to just cover that cost. Also, you lose your opportunity cost. By tying up your money in a home, you miss out on the potential returns from other investments. Example, if a $400,000 invested in the stock market with a 7% annual return could grow over $800,000 in 10 years. That's just the opportunity cost that it provides. Also, there's not a whole lot of lack of leverage. Real estate is one of those few assets that you can purchase using borrowed money. So paying by cash, you can give up the chance to leverage your growth and wealth faster. So now here are the pros and cons about obtaining a mortgage for your property. Some of the pros or advantages is that you preserve your cash reserves. By putting down a smaller amount, you retain cash for other investments for emergencies. Instead of paying $400,000 in cash, you can put down $80,000 and keep $320,000 liquid. Also, there's lots of tax benefits that come along with it. Since in Canada, you can deduct your mortgage interest on rental properties, reducing your taxable income. However, I'm not an accountant, so please consult your accountant for further advice. Another great advantage is that you can build your personal credit. Regular mortgage payments boost your credit score, making it easier to borrow for other assets in the future. Another great advantage is that you can leverage for wealth building. Using a loan or a mortgage allows you to buy more properties with less cash upfront. Example, with $400,000, you can buy one home outright or use it as a 20% down payment and buy five $400,000 properties. Over time, all five properties are going to be appreciating, generating cash flow, having that tax benefits. So you have a lot more leverage opportunities if you diversify that into multiple assets. One of the disadvantages of obtaining a loan or a mortgage is that it is a monthly financial obligation. A mortgage locks you into a financial fixed expense every single month. If your income drops, this could become very, very stressful for you. Another thing is the interest costs. Interest rates can double the cost of the home over the lifetime of the mortgage. Example, like if you had a $400,000 house at 5% over a 30-year amortization, you could be paying upwards of $770,000 after all of the interest. It does accumulate and it's not fun to see how much interest you've paid. Another negative is that it is a slower process. You have to get those bank approvals and financing approvals, wait for the appraisal and all the underwriting done by your financial institute that you're obtaining the mortgage from, and it can cause delays 2 weeks to, if it's a larger commercial building, potentially even 30 to 60 days. So what are some factors to consider whether you want to pay for cash or a mortgage? Well, the main thing is your financial goals. Are you focused on a long-term appreciating cash flow financial security? Well, that is something to consider, whether you want to not have a lot of reserves or whether you want to leverage the asset. Another thing to consider is the market conditions. In a competitive market like Saskatoon, cash offers often win, and homes sold to cash buyers close on approximate 30% faster on average. Also, what is your risk tolerance? Do you prefer peace of mind of owning your home outright for the flexibility of retaining cash? That's something to consider. And what are your future plans? Are you going to be buying a forever home or planning to upgrade in a few years? Or are you going to be flipping it in a year and don't want to pay all that interest and just pay for it in cash or get your forced appreciated value? Some actionable steps that might help you with your decision is to review and evaluate your financial health. How much liquid assets do you have? How much do you have in your emergency fund? I recommend 3 months of income minimum. And how much do you have in monthly expenses? What's your burn rate? Let's say, what's your average expenses every single month that you have to pay from all your subscriptions, loans, payments, all that stuff. Calculate that and make sure that you're capable and ready and able to obtain a mortgage or go through that whole cash reserve that you have. I would also advise you to talk with a mortgage broker. And I always prefer and recommend a mortgage broker versus talking to your bank, because the bank is going to sell you on their rate that they have that they want to sell. However, a mortgage broker, theirs fiduciary duty is to represent you. They're going to be looking at your file and shopping it around to all the credit unions, all of the banks, to get you the best rate possible, the best terms and everything. So I always advise you to talk to a mortgage broker. They'll know all your loan options and advise you on the best situation for you. I would also recommend just running the numbers. There's lots of apps and websites on there where you can plug in the mortgage calculator. Even if you want to go on my website, there's a mortgage calculator on there. Plug in the amount, the interest rate, the term, and everything, the down payment that you're planning on providing, and it'll give you the exact monthly payments that you're expected to pay, and seeing if that is in line with your financial goals. So at the end of the day, the decision to buy with cash or a loan is very personal. It's about understanding your financial situation, knowing your goals, and being strategic. Whether you choose to leverage the power of a loan or go all in with cash, the key is making a decision that aligns with your lifestyle and sets you up for success. So if you're weighing the pros and cons of either cash or a loan, or just starting your home buying journey, I'd love to help. Every week, people just like you reach out for guidance, and I'm here to help you make sure your next move is a smart one and you don't make any mistakes. So feel free to reach out to me. My contact details are below, and I'd be happy to connect with you.